fact, Devina Mehra is joining in. She's the founder, chairperson and MD at First Global, and she's joining in to discuss her view on the market. Devina, always great speaking to you, and good to know that you are in Mumbai. You're in Mumbai right now, right?
Yeah, I'm in India.
Okay, you're in India. So good to see that, and hope you have a good stay here. But, it's been a great run for this market. Not just Indian markets, global markets are doing well. Commodities like gold are doing well. How are you feeling about, the global market situation right now? And what's the best way to approach it for the rest of the calendar year?
I'm quite positive on the global market, especially the equity side. So that remains, that has been my stance for a while. And besides, everybody only looks at US, so that obviously looks fine. And but the good thing has been that unlike 2023, where for the first 10 months, there was only one thing which moved, which was the 7 mega tech stocks. And that was actually a worrisome time because the S&P moved, let alone the NASDAQ, 90% of it was just 7 stocks. But from November onwards, that has broadened quite a lot, and which is a good thing. And some of those magnificent 7, as they are called, have fallen behind. Tesla, I was reading just a couple of days back that it was the worst performing. It has been the worst performing stock so far in the S&P this year. Of course, it's rallied a bit since then. But so as I always say, the themes change, the leadership changes, but there are always opportunities. And one market which we have been overweight on from, I think, about a year ago has been Japan. India also, in our global funds, we are somewhat overweight. China, we've been waiting for a bottoming out, but the bottoming out hasn't happened yet. So yeah, there are a lot of things where you can, there are a lot of opportunities, and equity markets in general look fine from a medium-term perspective.
So Devina, China has not bottomed out. What will be the markers to assess when China bottoms out, and what is your own view on that market? When will it bottom out?
That is difficult. I mean, as I said, we've been watching actually the last 6 months, that it's just as we were watching Japan beginning of last year for a signal, and that signal came around April and we went overweight. But China has been among the major markets the most beaten down one, and people try to kind of correlate things with the economy and say that what happens in China and therefore what will happen in terms of economic terms, and therefore what would happen in the market. But it's not so simple. The very fact that the Chinese market made a high in 2007, and since then the Chinese economy is up 7 times and the market has not taken out its high, it shows you how far the disconnect can go. So you have to watch the market indicators rather than what is happening in the economy.
Devina, hi, morning. Prashant here. Now, where does one get to make money? I know that in the near term, your view is a bit cautious, next 1 to 3 months, right? So one got to protect downsides as well. But what about commodities? Suddenly there's a fair bit of excitement. That old thesis of a big super cycle and metals like copper is making a comeback. It's a thesis, but we'll see where it goes. Oil prices, 90-ish, sort of hovering there, and other commodities have also been doing well. Is that the space where you think one can sort of make incremental money from here? Just talk to us about that, Devina.
Yeah, so in our rebalance, which we carried out just now in the last few days, because we rebalance every quarter, we've added a couple of metal names since you spoke of commodities. But I mean, I am not into these grand narratives of super cycles and so on, because the narratives always follow what is happening in the market. And commodities upticks often don't last very, very long, because that is not beneficial for the majority of the world. But I mean, as of now, as I said, the metals look good. We've added a couple. As far as the market is concerned, yes, I mean, while I'm cautious about the next 1 to 3 months, that doesn't mean that you should be out of the market, because I always say that there's a risk of being invested in the market, which is a risk of a downside, but there is also a risk of not being invested and missing out of on an up move. And up moves often happen when you least expect them to. So unless there is a possibility of, very clear possibility of a big crash, which I don't see, it is better if at all you want to do anything, you can hedge a bit. We were hedged up until now. Those hedges expired. We are just reevaluating how many hedges, how much to hedge now. But we definitely are not making a big cash call, and we plan to be mostly invested. In terms of sectors, I've often spoken about capital goods, industrial metals. So we've been trimming every quarter, but we still remain overweight. Last calendar, from beginning of 2023, we went overweight autos and pharma. We've added in both these spaces in this rebalance also. Will be a little overweight construction. So broadly, that's what we have done. IT is one space I'm watching for bottoming out this year, but again, still waiting for the signals for that to happen.
Any early signals? No, not yet.
Yeah, I mean, I expect sometime this year that would happen, but right now we are not overweight.
Chemicals, and that's another global sector, especially agri-chemicals?
I mean, right now our systems have not signaled any big names there. We'll keep a watch. Again, it's a volatile area. And also the chemicals, while we talk of it as a chemical overall segment, often what happens is that something which is good news for one segment of the market is bad news for another segment which uses that product as an input. So chemicals, you have to go into details about every company's product list and what's happening in each of those things. So it's not a sector where I think broad calls work.
Devina, just coming back to the larger theme, right? There is so much talk about de-dollarization right now in the global markets, especially with what's happening with gold. But this is a narrative that has been going on for a while. How are you looking at all of this, and how do you think markets like India could either benefit or fit into the scheme of things if de-dollarization plays out?
I don't think it's going to happen in any meaningful sense. And as you said, these are narratives, which means they are stories. And stories always follow what's happening in the market. And I'll take you back to 2003 to 2007 when emerging markets did so well. Emerging market index went up 3.5, 4 times. India went up 6, 7 times. And at that time also you had heard that US is over and this is now going to be the century of India and China. That's when BRICS was coined. But as soon as the outperformance of emerging markets went away, all that story was forgotten. So de-dollarization is not going to happen in a hurry. It has, even over decades, very little of that has happened either in terms of how much of the trade is built in dollars or in terms of how much of the central bank reserves are held in dollars. And really, if you look at it, what are the alternatives? Euro to an extent is there, which anyway is used, or a little bit of Swiss franc. But still, dollar remains the major currency. And if you're talking about the Indian rupee, for instance, becoming an international currency, I mean, think about it, who would want to hold Indian currency beyond the point that you are importing from India, which is what happened with Russia rupee trade, that beyond a point Russia said, what are we going to do with the rupees? China has a better case simply because they export so much. So, therefore, their currency is acceptable in more places because the countries can use it to import something from China. But on a larger scale, I don't see that happening in a hurry. So this is all stories.
Okay. And why are you not in the camp of a commodity super cycle, Devina?
Again, see, this is super cycles are all stories. If you go back and look at the same people who are talking about super cycles, when had they said it last and what happened? So normally that doesn't, commodities, as I said, hurt a lot more people than they benefit. So commodity bull markets are typically something people don't like, unlike most other bull markets, and therefore difficult to sustain. And so, I mean, stories can be formed anytime, but I don't see that like it happens for a period of time. I'm not saying it will, the commodity prices may not go up for a period of time. I told you we've added metals. But I don't believe in these like 10-year cycles of commodities.
Devina, by that same token, would you agree that this entire narrative, and I would call it a story as well, that China is going to disappear as a viable market for investment managers and ex-China funds, etc., will be the new thing. You think that's also a passing fad?
Sorry, I missed the first part. What would disappear? What
No,
what
we're talking about stories, right? We're talking about
Right.
stories and
Yeah.
how they rarely play out. Sometimes they do, but for short periods, as you said.
Yeah.
This narrative, right? China plus one, and then take China out of the equation, and the ex-China, EM ex-China funds. Do you think that is also kind of a passing fad, a story which China perhaps is just too big to ignore in that sense? Briefly, Devina.
Yes, of course, China is a very large market, even on an overall sense, not just of course, it's the largest in the EM. And, because it has not been doing well, that is when people say that, just take it out. And that often is closer to the bottom of that market rather than the top. So as with all any kind of thematic funds or schemes come near the peak of the cycle, or in this case, because you're taking out China, you can say it's probably a signal that China is closer to the bottom.
Absolutely, and I think that's an important framework to remember. Thank you very much, Devina. Great to have you with us here. Great chat as always. Appreciate your time here on CNBC TV18. Thanks indeed. Well, that's Devina Mehra with thoughts on markets, global markets, commodities, the market here, sectors.